This is a quick start guide for the Excel Skills Business Plan Cash Flow Forecast template. This template enables users to create cash flow projections for a business plan which includes 12 monthly periods and 5 annual periods. Let's look at the template assumptions. The business name is used as a heading on all the other sheets. The start date that is entered determines the reporting periods that are included in the template. The next section is the income statement. So the year 2 to 5 calculations are based on the assumptions that are entered on this sheet. And the values for the first 12 months need to be set on the ink states sheet. So as you can see, the template includes 12 monthly periods and then 5 annual periods. So the annual periods calculations are based on the assumption sheet. The first 12 months, the user input needs to be entered on this sheet. All the rows that require user input have been highlighted in yellow in column A. If a row doesn't contain yellow highlighting in column A, it means that it's calculated. The code in column A is used for sales tax and trade debtors or creditors calculations. The first 2 characters is the sales tax percentage that should be applied to the appropriate amounts, and the last 2 characters determines whether the appropriate amounts are included in trade debtors or creditors calculations. A C1 would result in inclusion, and C0 means that it's a cash income or expense and therefore not included in your trade debtors or creditors calculations. The section at the top of the sheet includes 2 income lines. If you want to include additional categories, you can insert the appropriate number of rows in all of the sections. So in a turnover, cost of sales, gross profit, and gross profit percentage sections. The cost of sales and gross profits value sections are calculated, so you could just copy the formulas from one of the existing lines and then enter your values in the gross profit percentage and turnover sections. Other income also needs to be entered by the user, and then operating expenses, you can review all the existing expenses and change the descriptions where appropriate. You can also insert additional rows if you require more expenses. Same goes with staff costs and then depreciation or amortization. Interest is calculated based on the 4 amortization tables, 3 for loans and 1 for leases. And income tax is calculated based on the percentage on the assumption sheet. Dividends is also calculated based on your assumptions. The retained earning totals are also automatically calculated. There are a few ratios at the bottom of the sheet, and that's basically it for the income statement. Let's just go back to the assumption sheet. As you can see, your annual turnover growth is used to calculate the year 2 to 5 income values. The operating expense, the annual expense inflation is used to calculate your expense values from year 2 to 5. This is also used for staff costs, depreciation and amortization. The amounts that you enter on the assumption sheet is used in year 2 to 5 on the income statement. And that's basically it for the income statement. The next section relates to the cash flow statement. So if we just have a look at the cash flow statement, you'll see that user input rows have also been indicated in yellow. Where the code is green, it means that a positive amount needs to be entered. And where the code is red, it means that a negative value needs to be entered. So you'll see like purchases of property, plant and equipment, which is a cash outflow, is indicated by a negative amount. Okay, so where you have yellow highlighting, the user input values need to be entered for the 12 monthly periods, and then the year 2 to 5 values need to be entered on the assumption sheet. So this all relates to the cash flow statement. Okay, the next section relates to your balance sheet calculations. So inventory days, debtor days, and creditor days are used in the inventory, trade receivables, and trade payable calculations. The payroll accrual is calculated based on a percentage of staff costs. You can also specify the payment frequency, the first payment month, and select either the current or subsequent option. If you select the current option, it means that the payment is calculated up to the current month. And if you select the subsequent option, it means that that payment is calculated only up to the end of the preceding month. Sales tax percentages can be specified in this section, and for sales tax, you can also set a payment frequency, a first payment month, and select either the current or subsequent option. Income tax, you specify the income tax percentage here. You can include a assessed loss amount if applicable, and you can set the payment frequency, first payment month, and select current or subsequent for income tax. We then get to the loan terms. So, as I stated previously, there are 4 amortization tables, 3 for loans and 1 for leases. The amounts of these loans or the leases starts with the opening balance, and if there are additional loans, these amounts can be entered on the amortization table sheets. The loan terms that are set in this section are then applied to these amortization tables. The next section is the balance sheet opening balances. So these are at the end of the financial period preceding the template start date. It's like a trial balance section, so assets should be entered as positive values and liabilities and equity as negative values, and the total of all your opening balances must be nil, like any trial balance. Your last section is the dividends, where you can set a dividend percentage as a percentage of your net profit. You can set a payment frequency, a first payment month, and then you can select current, next, or subsequent, where current, the calculated amount is included as a payment in the current month. Next would be the next month, and subsequent means that the payment months, the relationship between the payment months and your year end is used to set your payment months. Okay, so we've gone through the income statement and the cash flow statement. In terms of the balance sheet is automated. So all the calculations on the sheet are automated. So let's now look at the loan amortization sheets. So the amortization tables are automatically compiled, except for the additional loan amounts that can be entered in column C. This is the same for all 3 loan amortization tables and the leases table. The interest charges in column E are included on the income statement, and the capital repayments in column F are included on the cash flow statement. And that's basically it. If you need more guidance on the template, please go to our detailed instruction sheet where we cover all aspects of the template. You can also visit the support section of our YouTube channel where we post videos based on user feedback.